E 12.6. Sorocaba Corporation had the following transactions during the current period. To analyze the transactions, before we start, I'm just going to paste the sketch that we made at the last exercise because I think that it helps. Okay, so let's journalize the transactions. The first one happened on March 2nd. Issued 5,001 real par value ordinary shares to attorneys in payment of a bill of 44,000 for services performed in helping the company to incorporate. Okay, so these shares, they were not issued in exchange of cash, correct? They were issued in exchange of a service performed. So in this case, the account that we debit is organization. This N looks weird. Organization expense, because the shares were issued in exchange for a service performed, in this case the attorney service. And over here we have they were ordinary shares, right? So we are actually looking at these over here. We have a value, right? So we know that the issuance price was 44,000. So over here we're gonna have 44,000. But if we take a look over here, we have 5,000 shares and 1 real per share, which means that actually this is 5,000, right? So there is a difference between 5,000 and 44,000, which means that we're going to need both of these accounts, because this one is going to be the number of shares times the par value, which is going to be 5,000, and this one is going to be the difference between the 44,000 and this 5,000. So I'm going to go ahead and write the accounts here. Since we are issuing ordinary shares, we are going to have share capital ordinary and share premium ordinary. Okay, so like I said, for the share capital ordinary, it is always the number of shares times the par value. So 5,000 times 1 real per share, that gives us 5,000, and the difference, that gives us 39,000. Okay, second one was it was an entry from June 12th. Okay, issue 60,001 real par value ordinary shares for cash of 468 reais. Okay, so in this case we issue them for cash, so our cash has to go up. And over here, let's take a look. This times this is going to give us 60,000 reais, right? So this is definitely not the same amount as this, so we're gonna have these two because we need that account to have the difference. So again, we are going to have both accounts here, and again we are issuing ordinary shares. Okay, so they were issued for 468,000, and over here we have 60,000. So I'm gonna put these numbers here, and the share premium ordinary, like it said here, it is the difference. So we're gonna have 468,000 minus 60,000, that gives us 408,000. Okay, July 11th, what do we have? Issued 1,100 reais par value preference shares for cash at 110 per share. Okay, so we're dealing with preference shares, so actually these are the entries, these are the accounts that we're going to be crediting, right? Okay, so here we don't have the total issuance price, right? But we know that they were issued at 110 per share, and we had 1,000, so we can actually calculate, right? Our total issuance price is going to be that 1,000 times the number that we actually issued for. In this case, we issued for 110. So they were also issued for cash, and we're gonna have 1,000 times that 110. That gives us 110,000. Again, since there is a difference between this, if we multiply 1,000 by 100, that will give us 100,000, right? But remember that our issuance price is 110,000, so we actually need to remember that we have a difference there. So we are going to have both accounts too. Here we have preference shares, so let's not forget to change the last name for preference. So we're going to have share capital preference and share premium preference. Now for these accounts, the rule is the same. Remember, this one is always the number of shares times the par value, and the share premium preference is always the difference. So for our share capital preference, it's just going to have 1,000 times 100, which will give us 100,000. And for the share premium preference, that is going to be the difference of 10,000. Last entry happened on November 28. Purchase 2,000 treasury shares for 18,000 reais. Well, in this case, we just purchased the shares. We don't even have the par value, right? And we purchased treasury shares. So when you purchase something, your cash has to go down, right? Because you're spending money in order to purchase. And your shares are going up. In this case, your treasury shares are going up. So this one is pretty simple. And we can just go ahead and record the number of 18,000 reais for both of them.